Donald Trump, as President of the United States, could start a currency war. So says Hussein, currency strategist at FXTM, with us in the studio. Morning, Hussein. Good to see you.
Good morning. Thank you for having me again.
You posed the question, is Trump about to declare a currency war? Answer your own question, yes or no.
I mean, at this stage, it's difficult just to give like a blunt answer whether it is yes or no. But signs are already there. And we can see that from Trump's tweets, from his messages, from his previous promises to have China on the manipulating currencies list and such as other currency. We can see from his administration as well, from Navarro as well, his trade advisor, just also saying that the euro, Germany is using an over or devalued the euro. So all these are really signs that there's something going on, but we still need for confirmation probably from his administration yet.
I've got a couple of those quotes that you've mentioned, and one is from Peter Navarro, who is the head of the National Trade Council and a currency hawk, particularly on China. He says Berlin is using a grossly undervalued euro to gain advantage over trading partners. So that's the Europe. And then the Asia story, President Trump himself, China and Japan, play the money market. They play the devaluation market while we sit here like a bunch of dummies. So that is tough talk. But as we all know, talk is one thing. Actually doing anything is quite another. I haven't seen anything out of the United States over the past month or so that suggests that the administration is doing anything to manipulate the currency market or start a currency war. Lots of talk, just no action now. But maybe I'm missing something.
No, in fact, this is what we are also waiting for. This is what we are waiting on daily basis, on weekly basis. Just continue to monitoring the developments on what could be happening, and probably and the next maybe let's say 1 week probably we could get some news, especially when President Trump does address the joint of Congress. At this stage probably we're gonna get to know more about his economic policies, and let's go back a little bit during the 2010 area. I mean, in 2010, the Fed was a central bank that started devaluing the currency, probably in an indirect way through quantitative easing methods and through also reducing interest rates to zero. And then just other central banks followed these policies. So probably the U.S. economy went faster back out from recession. We can still see now the recovery happening in Europe and same in Japan. And this is, I think it was the phase what we call it as a cold currency war. So whether it's gonna be taken to the next phase where we're gonna see something similar to 1971 when President Nixon did impose tariffs on countries, and this is when we saw the end of the Bretton Woods era. So probably this could be happening again, and we have also seen comments from President Trump that he wants to impose tariffs. It could be above than 40% on China, and this is where we can see the currency war really starting and ending by a trade war. Probably no one going to be with the winner of this war, and as we go back as well probably to the 30s, we've seen one of the worst currency wars. If we look at the Great Depression that happened for almost 10 years, nobody was the winner at the end.
You mentioned China there, Hussein. Are we seeing a change in policy, do you think, from the Chinese government? I mean, we saw the renminbi decline around 7% last year, but it has actually been appreciating in the first month and a half of this year. There's been a bit of a crackdown on capital outflows by Chinese authorities. They're trying to convince people to keep money at home. Do you think they're trying to appease Washington a little bit, or is that not the game?
I mean, this could be one thing, because when we talk about currency wars, at some stages there is truth, some stages it could become nasty, and I think everybody just want to calm things down, whether it's from China, Europe, or even Japan. But when we look at the Chinese case now and just compare the reserves, when we go back to like 2015, they had $4 trillion of reserves, and they have lost almost, for now in 2 years, $1 trillion just to try to control the currency, from devaluing. And this is one of the reasons that we think that China is trying now just to control things things instead of getting into a currency war. However, if the US did impose tariffs on China, then they will have no other choice. Otherwise, they have to deplete their foreign reserves, or they have to devalue the yuan, and I think this is going to be the case.
But when we're talking about a currency war, I mean, Richard had a couple of quotes there. We're not just kind of talking about China, are we? I mean, this is more kind of like world currency war. There have been comments about Europe, particularly Germany and the euro, coming out from trade advisors in the Trump administration. People are looking at Mexico, Japan, Taiwan, South Korea. I mean, how big could this get?
Mexico now they cannot accuse her accuse this country for a currency war. However, when we look at probably Korea, Taiwan, yes, it could be on the list. China could be on the list. Japan, Switzerland as well could be on the list, and this is a very risky thing as well for one of the safe haven countries where you could be sending your money out. So it could be go internationally. It's not just to specific countries or economies. It could be an international one.
Hussein, carry on, bro.
I just wanted to know what that would actually look like, Hussein. What would the knock-on effects of that be?
Disastrous, to be honest. and we have learned some lessons probably from the 30s, from the phase as well from the 60s to the 80s. And I thought last year probably we are close to an end of a currency war, because when we start seeing some economic growth in countries, and then they try to avoid currency wars because there's no need for it. But usually a currency war happens when we do have very weak growth, probably deflationary pressures, and this is when it starts. However, when we see Trump, who wants to make America great again, I'm afraid that he's trying to make America great again on the price of other countries as well. And I think 2017 is going to be an amazing year development.
Hussein, final question. Tell me this, for the retailers listening, for the hoteliers in particular listening, the strong dollar, and by extension the strong dirham, is killing them. It's really, really hurting their business and hurting their competitiveness. What do they do in 2017? You're a strategist. What's the strategy for those hoteliers and retailers based here in Dubai?
I mean, for in our financial markets, we do have a lot of tools, and retailers, yes, they're probably going to be impacted by a strong dollar if it continues to appreciate. They have some tools probably to hedge currencies. However, I mean, there's nothing to do when we are seeing an economic slowdown. So it's not just retailers. If you look at other sectors as well, you look at the real estate sector, look at the banking now, they are probably having huge drops in profits in 2016 as well. So I mean, we are going through an economic slowdown, as not just the retailers. So there's nothing they can do as a retailer unless we do have a different monetary policy in the UAE, and since we are pegged to the US dollar, there's nothing you can do about it.
Hussein Syed is FXTM's Chief Market Strategist. Appreciate your time this morning.
Thank you.